I got a lot of emails around 1 in the morning Eastern time. The markets had big moves. The president and first lady tested positive for COVID. Now we look at the markets and the moves, and we see that a lot of that has been reversed. So my question is a simple one. First of all, we wish the president and first lady a speedy recovery. But in the end, is the market looking at today's data in the form of the jobs report in a less negative fashion than maybe some of us are? It certainly seems though the real moves were prompted by the president and first lady getting COVID at 1 in the morning. Your thought?
Right. Well, I don't have much to add to that that's particularly profound. Obviously, the effect of the president's COVID on both markets and on the real economy is primarily an increase in uncertainty. And the good news is that the uncertainty will be resolved pretty quickly. And of course, we hope in a positive manner. So I would say this is hopefully just a few-day event. Obviously, if things go in a negative direction, things will be different. But I think most of us don't anticipate that. And so I would guess that by this time next week, things will look much more stable than they do right now. So I would think of this as a relatively short-run effect.
You know, the jobs report very quickly, it was disappointing in many ways. The revisions were positive. Everything else was pretty much negative. Hours held up. Wages kind of held up. The one bright spot is your favorite, EPOP. EPOP had its 5th month in a row. It improved employment to population. Participation rate actually was down 0.3.
Yeah. Well, good. I'm glad you mentioned EPOP, because EPOP is really a good indicator of exactly what we're seeing in the economy. Remember, we've been talking about this for a long time, and I've been saying what we're going to see is an S-shaped recovery. You know, you basically go from very steep negative job declines to 0, and then you get steep increases, and then it's going to tend to flatten out. That's what you're seeing in EPOP. So while we did see positive growth in EPOP this month, it was not as large as we saw in the previous month. And that's, again, what you expect. When you get closer to a normal employment economy, we're not there yet, obviously, but when you get closer to that, you're going to see job growth slow down. So this is completely consistent with the S. Not only are you going to see that in jobs, you're going to see it in GDP as well. So we know that this quarter's GDP, this quarter's GDP, as you know, everybody's saying, we don't know the exact number, but it's going to be 20 to 35%, very large numbers people are expecting. That's not going to persist forever. So that's going to be the initial gain, and then things are going to slow down. So again, that's just the S shape showing up, manifesting somewhat later in GDP than we're seeing in the jobs reports.
Now, you also expressed to me that you wanted to clear up some of the data surrounding minority employment levels, progress, non-progress, against some other numbers, because you thought maybe we didn't quite catch the gist of it. Why don't you explain?
Yeah, of course, we always look at that. We're always concerned about how low-wage workers, minorities, less educated workers are doing relative to the whites and the educated workers. And so this was a month during which African Americans actually made pretty significant gains relative to whites. So if you looked at the unemployment rate among African Americans, it dropped from 13% down to 12.1%, obviously still a high rate. But that's a drop of almost a full percentage point. If you look at the same thing for whites, what you saw is a drop of about 0.3 percentage point. So both in absolute and relative terms, African Americans actually made gains this month. So that's good news for a variety of reasons. They were the ones most hurt during the layoffs because they were in the industries, retail, food, beverages, that were most affected by it. So that's a piece of good news.
Shepard Smith here. Thanks for watching CNBC on YouTube.